everyone, Maurice and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video, entertainment purposes only. The stock we're going to talk about today will be Cciv, Churchill Capital, or LUCID Motor. So it's been a while since I last covered Churchill Capital, or CCIV, and as of today, on June 2nd, on Wednesday, and happy Wednesday to everybody again, and thanks for watching. With respect to Churchill Capital, it's up about 4.5% today. And as of my recording, it's currently trading around like the $22.55 level. So I'm gonna go through a technical analysis to see where do we see the stock going from here, right? Is this more of like a pump and dump type of thing going on right now? Or are we seeing a more of a confirmatory reversal going forward, going back up to the all-time high soon? What are the resistance levels you should be looking out for if you want further dollar cost average and my price target for a year in 2021 as well? So stay tuned, stick around, let's make some money. Moving on to the technical analysis for Churchill Capital, CCIV, or LUCID Motor. So looking down on a historical perspective, you could see that when the stock was begin as a SPAC, a special purpose acquisition vehicle, it started trading around like the $10 mark, the $9.90 mark, right? And subsequent to that, we gained some media attractions with respect to the value proposition that LUCID stands for, right? Being a high-end luxury EV vehicles from the US, competing against companies like Tesla, like NIO, XPeng, or even Ford F-150, the EV trucks that they propose that by 2040, that or the Ford vehicle is going to be converted into electric vehicle. And also on top of the Biden green energy plan, right? So all of that media affectation on top of the S&P 500 inclusion for Tesla and the stock lift for Tesla as well, was subsequently drove up this huge euphoric pump, right, from the $10 mark all the way to the $64.86 mark, which is basically like a 600% gains in the span of like a couple months, right? Literally a couple months, right? And with respect to that, because of the whole chip shortage and also a lot of the negative media affectation with respect to the inflation scares, with respect to the monetary policies, with respect to the corporate tax adjustments, and with respect to just the the tension that we have between U.S. and China, a lot of those media affectations on top of the sector rotations going from the growth stocks to the recovery stocks, all of those media affectation drove a lot of the selling pressure across the market for the growth sector, which subsequently drove this huge sell-off from the $64 level all the way down to the 27, and then subsequently more of like a downward escalator curve downward, right? And ever since then, we've been kind of consolidating around these levels, right? And you could see that these levels are well defined here around like the 23.39 level on the top of the consolidation spectrum to at the low point of the $17.64 spectrum, right? So that's the historical. Let's look at the recent trends real quick, okay? You can see that as of today, we are up about 4.17% at the moment, trading at about $22.46 level, right? We are basically rebounding from the bottom of the 17.25 that we occurred early in May, right? On May 13, based on the chart that we see here, right? And as of right now, you can see that with respect to the green candle we formed yesterday, and this is basically matching with this gap that we've formed historically, right? And right now we're kind of pushing up away, and some of the questions that might arise is it a good time for us to buy right now, or is this a time that we should be, selling, taking our profit at the moment, right? We could take a look at this real quick. You can see that based on the technical analysis right now, we have basically broken through 1, 2, 3 resistance levels right now. And with respect to the current resistance level, we are basically testing this level of the $22.11, which was the psychological resistance level that we formed historically. You can see that we formed that once, we formed that twice, 3, 4, 5. We could go further back, 6, 7, 8 times historically, right? So right now we are forming this as like a base at the moment, right? And the next leap that we're going to go up to will be the next level of psychological resistance at the 23.36. So I do foresee us some more of a pressure going forward, more of an upward momentum push going forward. Knowing the fact that we did break that psychological resistance level at 22.56 at one point, knowing the fact you could see that the little mini green candle right here. So I think we will have some sort of like consolidation going back to somewhere around the 2272 in the near future, and then subsequently maybe on sideways consolidation. And by then, we should see more like a sell off down to the 2206 level, right? And then retest this level. And by that time, the MACD might be slowly fusing back together. And you might even ask me, do you advise that we buy at this moment right now? I would say, no, I don't advise buying at this moment right now because of the fact that we do have a relatively large gap that needs to be filled going back down, right? We have a, more like a, I would say about a 5, 6 to 7% of an upstream from here, but a significantly higher percentage in terms of like a loss potential. Like you could see that with respect to the drop that we'll potentially get after the reversal, knowing the fact that the MACD is already crossed upstream, that you could see that the separations of the lines relatively wide, and also in terms of the spread has already been incurring for quite some time now, that this is pretty much a stretch at the moment, and you could see that the RSI is currently pushing upward on more of an overbought level at the same time, that buying at these levels right now would incur much higher risk in comparisons to buying at these levels right here, right? You could see that with respect to the psychological resistance level, despite having strong resistance level that we have formed historically at those 2356, and also with respect to the 2197 level, the consolidation is a lot more substantive at the bottom here, right? At the 20, or the like the 1953, or the like the low 20s, 32 levels, right? So I would suggest that we wait off a little bit today, you know, despite this pump that we're seeing today, and buy on the subsequent dips that we're going to be seeing going forward. Because right now, this is relatively shallow. You could see that the resistance level that we formed here is relatively shallow. We basically testing this once, twice, 3 times, right? And the last one was basically back in the day, right? So we have like 5 resistance levels, right? However, the bottom, of the $20 and or 1958, the level of resistance is a lot more substantive. You could see that just stretching it back, right? Like multiple times here, like 4 or 5 times, another 4 or 5 times, right? And then you go back all the way here, you could see a bunch of times again, right? And then you see a bunch of times again right here, right? So that's a strong base, right? And I would say, did we miss the bus on the pump? I would say no, because of the fact again, right? The MACD is overly crossed, the RSI is highly stretched up. That today is some more of short squeeze at the same time because of some positive media affectation, and also a combination of like just the sector rotations to more of like the growth EV stocks. And Churchill Capital is one of those very volatile stocks that are very growth oriented, and the traders in this equation are typically either a big whale as a corporate investors, but with a big percentage of retail investors in the equation, which subsequently drives a more of an emotional volatility to the stock price, right? So today, I think you want to wait for the MACD and the RSI to cool down first, and then start chipping away at the next psychological resistance level at the 1959, or if you're even more risk averse, at the lower level, like if you want to buy in as a first level, I think first level resistance will be like somewhere around like the $20, because that's just like a psychological resistance level that people typically look for. It's a flat number. But as a true resistance level, you want to go down to the $1957 level, which is a firm consolidation level that will form, right? And you might even ask me, are we going to go back to the 1725 again? I would say the likelihood of that would be very unlikely, at least not in the near couple weeks from now. Because like for us to do that, you basically need to completely sell down by like 15-20% from here, right? And I think for us to do that, you will completely destroy the MACD and also the RSI perspective for us to go back all the way down, right? We might go down depending on obviously the media affectations and more news about the projections that it has, and also some legality issue that is percolating as well. And also on top of that, the chip shortage on a macro perspective on the EV production level on supply and demand dynamics going forward, that could have a pretty detrimental affectations to the stock price as well. So contingent on us learning more about those, contingent on no negative legality news, we should be trending upward accordingly. But right now, I would say we want to weigh off because the risk is relatively high right now in terms of the risk and reward ratio for profitability gains going forward. So hopefully that's helpful. So just to recap on all the numbers that we just talked about with respect to my technical analysis on CCIV Lucid Motor. So with respect to the current price point that we're trading at right now, up about like 5-6% as of today. I don't advise buying at this level right now because we have a relatively large gap to fill downward from here with a lot of lack of substantive consolidation level that shows us support for us to sustain at this level right now, right? So the risk is relatively higher than the rewards that we'll subsequently get. So I think at first level for you, the dollar cost average would be somewhere around like the $20.50 level. And again, that's like a psychological resistance level, a flat number that investors typically like to buy in. And the likelihood of us getting down from that $20.50, I think that's likely, to go down to a $19.50 level, right? And that's a truly substantive psychological resistance level that we've been forming at least 15, 17 times historically. We've been kind of bouncing off the walls from those levels for quite some time now. So that's a very attractive level for you to continue to build your dollar cost average perspective. And even when we get down to the black swan event, which I'll give that maybe like a 0.1% likelihood of us getting down to the 1750. That's a still level that I totally recommend people buying in. If you believe in the long-term vision of Lucid Motor, if you believe in the long-term macroeconomical vision for EV adoptions going forward globally and in the United States, 1750 will be a completely still level for you to get in, but that will completely destroy the the macroeconomical dynamics and the supply and demand charts that we have on both a MACD and RSI perspective, right? So I don't think we will actually get there, at least not in the near couple of weeks from now, not even a month from now, because the chart just wouldn't make any sense in a logical perspective, right? And my price target for this will be $55, basically reaching almost all-time high from there, contingent on obviously the macroeconomical dynamics that we've identified, right? With the chip shortage, with respect to the inflation scares, with respect to the tax adjustments, with respect to the foreign trade tensions, and also on top of the productions that we should be foreseeing that's going to be actualized, that we will learn more from the CEO himself as the company further progresses going forward, right? But if you're buying at this moment right now, again, I don't suggest buying at this today, but buying on the dip coming on the $20.50 or anything below that, that will subsequently give you a 168% of an upside, or even 170, depending on what price point you're buying at, right? Or close to 3 times your money from here, which is a really good relative investment return in a growth stock perspective. Right, so that's it for today with respect to my technical analysis on CCIV, Lucid Motor, Churchill Capital. Really appreciate you guys for dropping by again and listening on the technical analysis and some of the insights I've identified so far. Appreciate it. Please hit the like button and also the subscribe and also the bell notification. And watch out for the next video coming up. Take care.